just want to sort of finish on the allocation point, because this is also very important. There is a sort of ongoing debate in economics about whether, money is endogenous, i.e. it's driven by the demand for money by firms. Of course, it is driven to some extent by this. But it's always the case that as a borrower, you know much more about whether or not you're going to be able to pay back that loan and what's going on in your business than the bank does, okay? And so the banks have an incentive to ration the credit they give out and to choose those borrowers that they perceive to be less risky or that are going to make more money, essentially, that the loan is going to create more money. And this is very important to understand because this is about the incentives the banks face. So if a bank has a choice between a business and the business owner has limited liability versus lending to somebody who's got for a mortgage, the bank knows if that loan fails, they can take the house. They're going to go for the mortgage under the current kinds of arrangements. And this results in this rather problematic outcome in the UK. This chart shows the net bank net lending by sector since 1997. And what you can see here essentially is that only a tiny amount, around sort of 8 to 10% of bank lending has gone into business, has gone into real GDP-related activity, as Richard was alluding to yesterday. And it's becoming a smaller and smaller percentage over time. So when it says business lending there, that includes construction, it includes small business lending, it includes transport. The things that actually create jobs that improve, enhance growth that is non-inflationary. And most of the rest of that stuff, secured lending to individuals, essentially mortgages, financial intermediation, you see this massive growth around the financial crisis. This is just speculative, non-productive finance that inflates asset prices, that causes these booms and busts. This is a dysfunctional financial system you are looking at here. It is not working for society, for the economy. It is a highly inefficient allocation of capital going on here, which is causing this problem. And I quite agree with some of the comments we heard yesterday. Let's control this. Let's restrict the kinds of credit we don't want, and let's incentivize other forms of credit. This is really, it's not a complicated issue, and we can talk about capital reserves and other forms of regulation until the cows come home. But this is the bottom line. This is what's happening in our economy. It's totally unsustainable in every sense of the word. And I'll finish there. Thanks very much.